BUA Cement is growing faster, but Dangote Cement is still handing out way bigger dividends. Which stock really belongs in your portfolio? The big picture. Why compare BUA Cement versus Dangote Cement? BUA Cement and Dangote Cement are two of Nigeria's cement giants, both massively influential on the NGX. But while Dangote is known for its sheer scale, BUA is drawing attention for its rapid growth and improving margins. Nairametrics recently analyzed both to see which company is executing better and which one pays more to shareholders. Here's a deep dive into how these two titans stack up, from production and profits to dividends and long-term valuation. Market performance and share price momentum. Dangote Cement is the second most capitalized stock on NGX, with a market cap around 10 trillion naira, giving it massive scale. BUA Cement, though smaller, market cap around 5.49 trillion naira, has been delivering explosive share price performance. In October 2025, BUA's share price jumped 13% in a single month, bringing its year-to-date gain, YTD, to 94%. Dangote also gained strongly earlier, but by November, its YTD return moderated to 24% compared to BUA's 74%. Takeaway. Investors watching growth may lean toward BUA, but Dangote remains a heavyweight in terms of market presence. Production volume. Scale versus growth. In the first 9 months of 2025, Dangote Cement produced 19.9 million tons, MT, slightly down from 20.5 MT in the same period in 2024. Meanwhile, BUA Cement ramped up production from 10.4 MT 9 months 2024 to 13.2 MT in 9 months 2025, a 27% year-on-year increase driven largely by improvements in its Obujana and Lafia plants. While Dangote remains the volume leader, BUA's production growth is significantly outpacing the broader cement market. Takeaway. Dangote has scale, but BUA's growth trajectory is sharper right now, a sign of efficient operations and upward momentum. Revenue, margins, and operational efficiency. Revenue. In 9 months 2025, Dangote reported 3.15 trillion naira, a 23% YOY increase. BUA Cement, for the same period, revenue reached 858.7 billion naira, marking an impressive 47% YOY growth. Gross profit and margins. Dangote, 1.856 trillion naira gross profit, approximately 59% gross margin. BUA, 429 billion naira gross profit, 137% YOY, but slightly lower gross margin at 50%. Operational efficiency. BUA's operating profit margin is 43%, which beats Dangote's 39%. Costs and financing. Dangote saw a massive drop in FX losses, improving its pre-tax margin to 33%. BUA's finance costs did increase by 75%, however, which weighed on its bottom line. Takeaway. Dangote dominates on absolute scale and profit, but BUA is proving leaner and more efficient at converting its revenue into operating income. Profitability and cash flow. Dangote Cement. Profit after tax, PAT, for 9 months 2025 skyrocketed to 743.3 billion naira, a stunning 166% YOY. Operating cash flow also surged, driving strong cash generation. BUA Cement, PAT for 9 months 2025 hit 289.3 billion naira, up 592% YOY, an outstanding leap. But its net cash flow dropped by 45%, settling at 221.1 billion naira due to working capital constraints. Takeaway. Dangote shows consistency in cash flow generation and profitability. BUA's profit jump is compelling, but its cash flow challenge could limit flexibility. Balance sheet and capital structure. Dangote Cement. Total assets approximately 5.74 trillion naira, equity 2.436 trillion naira. Borrowings reduced significantly to 1.32 trillion naira, down 47%, making its debt-to-equity ratio very healthy at about 0.54x. BUA Cement, assets 1.63 trillion naira, equity 609 billion naira, borrowings 472.6 billion naira, giving a debt-to-equity ratio about 0.78x, down from previous year. Takeaway: Dangote is more conservative in its capital structure. BUA is improving, but still carries more leverage relative to its equity base. Dividend battle: who rewards shareholders more? Dangote Cement paid 30 naira per share in 2024, totaling about 502.56 billion naira, representing a nearly 99.9% payout of its PAT. With 9 months 2025 profits already exceeding its full year 2024 PAT, there's speculation the 2025 dividend could rise to 54 naira per share. Over the years, it has consistently rewarded shareholders. Its 2024 payout maintained a payout ratio over 90%, aligning with its capital allocation discipline. BUA Cement paid 2.05 naira per share in 2024, totaling 69.42 billion naira, around 93.93% of its profit. With a 9 months 2025 PAT of 289.3 billion naira, the projected dividend could rise to 10.72 naira per share. That said, BUA's net cash flow challenges may make such a payout more difficult unless working capital pressures ease. Takeaway: Dangote shows consistency in cash flow generation and profitability. BUA's profit jump is compelling, but its cash flow challenge could limit flexibility. Valuation: which looks cheaper or richer? Dangote Cement. With its massive scale, strong cash flows, and consistent profitability, it's often seen as a blue-chip defensive play. BUA Cement trades at a higher PE multiple, about 17.4x, than Dangote, about 10.4x, according to Nairametrics, indicating the market is more optimistic or placing a premium on its growth profile. The premium multiple reflects investor appetite for a high-growth story, but comes with execution and cash flow risk. Takeaway: Dangote may look safer and more reasonably priced, while BUA is compelling for investors who believe in its growth trajectory. Final verdict: who's executing better? BUA Cement. Strengths: explosive volume growth, improving margins, and high revenue expansion. Weaknesses: working capital drag, cash flow pressure, and smaller scale. Ideal for growth-seeking investors willing to ride execution risk. Dangote Cement. Strengths: massive scale, huge cash flow, consistent dividends, very strong balance sheet. Weaknesses: slower volume growth, less leverage to dramatic growth leaps. Ideal for income investors or those who favor stability and high dividend payouts. Overall, Dangote reigns as the dividend king and cash flow powerhouse. BUA might be the sleeper growth champion, but its long-term appeal will depend on how well it manages cash and capitalizes on its operational momentum. Why this matters for investors. Dividend investors: Dangote offers strong, stable returns. BUA potentially offers higher payouts if it delivers on growth. Value investors: Dangote's PE ratio and balance sheet strength make it a solid foundational play. Growth investors: BUA's trajectory and production gains offer a compelling story, but if risks are managed. Risk profile: Dangote feels safer, BUA is more risk for reward. Final reflection: in the classic showdown of scale versus growth, Dangote Cement and BUA Cement both bring compelling narratives to the Nigerian stock market. Dangote is the dividend machine, reliable, massive, and cash-rich. BUA, on the other hand, is sprinting, rapidly scaling production, boosting revenue, and aiming to reward shareholders more generously. If you believe Nigeria's infrastructure story is still writing itself, BUA might be your ticket. If you prefer stability and consistent returns, Dangote remains hard to beat.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline